Tuesday's market closes were higher in the livestock, a sharply lower day in the grains. Here to visit about that, Dwayne Bussey with Bolt Marketing. And Dwayne, a lower day in the grains, and a lot of that selling pressure had started already before the WASDE report numbers came out, and a lot of macroeconomic concerns hitting the market again, right?
Yeah, it is. Sadly, it's more of an outside market influence. Crude oil down as much as $8 at one point, and stock market, uneasy as well. And U.S. dollar sharply higher too, starting to maybe have a little bit of an effect, or what we think will have an effect on our export demand. And they show that in the report a little bit today too. But you're right, to your point, we were selling this market off hard before the report, and it really just continued right afterwards.
So, are the funds going to keep liquidating here? What do you think?
Yeah, sadly, I'm afraid they will. Yeah, I think they're following the strong seasonal tendency where they get out of their long positions. Usually they're getting out of longs because the weather looks good. We've got rains after the 4th of July. The crop is more known. Maybe not totally the case this year. There's still a lot of people arguing and being concerned that, the crop isn't made and the hot temps that we have coming. But there was a little bit more rain in the forecast, so I guess you could say some of that liquidation. But to get back to your question, I think the funds continue to liquidate here.
Yeah, like you said, weather was a little bit of a play, but when you look at those extended forecasts, those still look pretty threatening, don't they?
Yeah, they really do. And that's why I don't feel like we traded fundamentals today. And it was more the outside markets. I think those funds are going to liquidate just because they basically just want to hit the reset button. I think they're getting money to the sidelines, see how this economic turn happens, how this recession goes through, and then they'll have their money on the sidelines ready to invest in whatever they want, which will probably be the stock market again next time, sadly.
Yeah. Oh, by the way, you mentioned fundamentals. We actually did have a WASDE report out today, and the market was trading lower even before that. So let's talk about some of the numbers. Corn and wheat ending stocks in production were raised pretty much as expected, right?
Yeah, really no big surprises today. The corn and wheat numbers pretty close to the trade estimates. Maybe a little bit higher spring wheat crop up here in the northern plains than anticipated. But like I'd mentioned before, you and I had talked about that. And the guys planted spring wheat rather late. They decided earlier this year they'd rather plant late spring wheat than late corn. Just drying corn that late in North Dakota isn't a whole lot of fun. So a little bit bigger spring wheat crop, but overall, not a huge surprise today in the reports.
No, the one thing that we were watching was what USDA did in terms of trying to get that lower acreage figure into the soybean number, ending stocks down about 50 million bushels in the new crop, but that was a little bit above expectations, wasn't it?
It actually was. Right away when I saw the trade estimates down around that 210 to 250 million bushels, I thought, boy, I don't think USDA is going to print something that low. And I knew they wouldn't print something under 200. It's so early in the year, they don't want to cause us to really get too crazy and ration too much demand before we even get to the crop. So they came up with 230 million bushels for new crop ending stocks, which is still tight. And Michelle, the way they got there by tweaking some demand really leaves a question mark for some bulls in the future that if China would pick up demand again, we could still have a very tight situation in soybeans in 2023.
So let's talk about technical damage. Did we do any with the drop on Tuesday?
It's amazing to say that the market's down as hard as it was today, and we didn't do any technical damage, but I really don't think we did because we still haven't gotten through the lows from last week. They're about 20 cents away, I think, in the corn market right now, and we go through those, then that's some technical damage and we'll keep going. But really, I can't believe I'm saying a down 42 day we didn't have technical damage in corn, but we really didn't today.
So let's move over to the cattle market. A nice update there. Feeders, the leaders, which we like to see on the lower corn. Can we continue to keep pushing the cattle market forward, do you think?
Well, in general, longer term, yeah, I think we can. I'm kind of friendly to this cattle market. It's fairly easy to be that way when you got a really higher cash market compared to the nearby August board, right? And I do always like the feeders being the leaders, and a sharp update there. It's almost like they kind of knew the corn market was going to flush today. And the funds are not very long, the cattle market or feeders. And it sounds odd to say as we head into a recession that they would actually put money into the livestock market, but this market is crazy enough. I think they could, and it's because we got good, strong fundamentals. Box beef producing, or box beef prices are higher than we anticipated and really showing good strength. So I think they can keep this market elevated moving forward.
Well, the funds had liquidated a lot of their length here, so obviously they have some room they could probably add on to that long, don't you think?
Right, that's my point exactly. Funds really don't go short the cattle market. So with them being almost out of the cattle market now and pulling out of corn, pulling out of beans, pulling out of wheat, they will look to invest their money somewhere. Some of it should be in the cattle market, I think. Maybe some of it's in the US dollar as a safe haven as well.
So we had some early cash at a little lower money. It looked like maybe some of those feedlots were getting pushed here because they're worried about weather. And are the futures putting a little weather premium in?
I think that's part of it this week. When we came in and saw the hot, dry forecast, the intense heat is right over what I would call feedlot country. So rightfully so, we should build a little bit of weather premium, especially because our carcass weights are down so low already. But with heat, you're not going to gain any weight to that, right? And like you said, the producers maybe sold a little bit lower cash this week just to get those calves sold out of their feedlots so they don't have to incur any death loss that might be coming with the heat. So the lower cash market this week wouldn't disappoint me at all, and it wouldn't surprise me either.
Hogs got slammed yesterday, it looked like, by that higher dollar. The dollar was up today, but we held in pretty strongly.
Yeah, that hog market has been performing pretty well. A little bit surprising and counter-seasonal too. Usually the cash market tops in late June, early July, and it hasn't this year. Honestly, our pork and beef demand is pretty strong domestically. And also we've got a little bit of ASF happening in Germany, of course, and that's got the futures market wondering maybe we're going to have round, I don't know if we're on 2, 3, or 14 as far as an ASF story, but that got the futures market kind of fired up here this last week.
Absolutely, and it's in one of the bigger provinces of Germany. So to your point, that is something the market will watch. Thanks for your analysis as always. Dwayne Bussey joining us with Bolt Marketing.